talk now to a manager who spends a lot of time crunching numbers from Tourmaline. Ernest Wong joins us, Head of Research at Baskin Wealth Management. Ernest, thanks very much indeed for joining us.
Happy to be here.
Is Tourmaline a stock to buy, do you think?
Well, we certainly own it, and we continue to be buying today. I think the big picture for Tourmaline, geopolitical issues aside, is that they are the largest natural gas player in Canada, and one of the largest in North America. And they are very well positioned for a higher natural gas pricing environment because of things like LNG, data centers, and especially as U.S. natural gas basins start to mature and look to Canada for additional supply.
I mean, we should remember that even if global natural gas prices are in turmoil, Tourmaline has some international exposure, but they're still tied very much to the North American market.
That's right. So I think because of what is happening in Iran and the Strait of Hormuz, certainly LNG benchmarks have been rising, but not really contributing to higher natural gas pricing in North America, because most of the LNG export capacity in North America is already full and fully contracted. So there's not really a way for anybody, including Tourmaline, to be able to replace that 20% of natural gas that has been displaced. Now, I think to your point, Tourmaline does have some contracts that are tied to global LNG benchmarks. I think it's going to be about 8% of their production for 26 and 27. So it's a nice boost to their bottom line, but not hugely material overall.
I mean, I wonder when will they ever change the name? Take oil out of it when they're a natural gas company. But anyway, that's the way they like to do it.
Right.
So Tourmaline Oil, is this one that you would just hold irrespective of your view on natural gas prices in that they are big returners of capital, et cetera?
Right. So this is really a capital allocation thesis more so than a bet on a specific commodity. Mm-hmm. I think the reason the stock is down today is because the natural gas pricing environment is fairly weak. They have said that there's not going to be a special dividend for Q1. Mm-hmm. Now, I think that is kind of the point of a special dividend, which is that Tourmaline uses special dividends so that in prices when natural gas pricing is high, such as in 2022, they can return additional capital to shareholders without committing to it in the future. And I think as shareholders of Tourmaline, we're really pleased that they're deciding to retain capital to really focus on completing their infrastructure build out to position the business for the next decades beyond.
You touched on this, Ernest, but just remind us, what is their LNG exposure? I mean, ultimately, how much of their production could start going to LNG exports, or do you have any kind of number on that?
So for 2026, about 8% of their production is tied to LNG benchmarks. Oh. They are not a direct participant in LNG Canada, but they are a participant in Rockies LNG, which is still deciding whether they want to go forward with that project. But I think the bigger picture for LNG is that as 11% of natural gas goes in the Canadian energy basin goes to LNG, that is going to be a tide that lifts all boats, including local AECO benchmark pricing. Mm-hmm. And we have yet to see that, but I think at least still moderately bullish on that in the medium term.
And of course, Qatar has really got a black eye, hasn't it, in this latest violence in the Middle East? It has been hit by Iranian attacks, and in the past it said, well, we're a rock of stability.
Sorry, can you repeat that?
Oh, just talking about Qatar in the Middle East, the huge LNG exporter.
Qatar, yes.
Yeah, sorry.
Yeah, so Qatar is the largest exporter of LNG. They're responsible for about 20% of global LNG exports. Mm-hmm. They have curtailed that because of the issues in the Strait of Hormuz, mostly exporting to Asia, places like China. And again, there's no real way for the world to be able to find alternative sources of LNG to replace that, and that's why you're seeing spot LNG prices rise quite significantly over the last few weeks. Now, I think what you will see is that in places like Asia or even in North America, because of higher LNG prices and the lack of supply, they may end up switching back to coal. So that is something we've seen coal prices rise by 20% over the last week as well. And so I think there's a lot of dynamics in terms of how that ends up influencing natural gas pricing in the near term.
Thank you very much indeed for joining us. Always great hearing from you, Ernest. Ernest Wong is Head of Research at Baskin Wealth Management.